Because we're about to start. Nice. Later. Hi, builders, investors. Thank you for still hanging there. It's a tough market, it is. But I think it's also the time for us to build strong relationships and start building up that first mover advantage. Whether you're here just to meet people or you want to get some inspirations, you're in the right place, because this afternoon we've assembled a stellar lineup of discussions with some very prestigious speakers. Before we start, let me introduce myself. My name is Julia Chen. I'm the CEO and co-founder of Souli Protocol, S-O-U-L-Y. We're building a decentralized consumer graph to empower users to control and monetize their data. We're also a data infrastructure that builders can integrate with to build up their own data layer. Okay, without further ado, let's kick things off. So our first panel, we talk about how do we find alpha in crypto? Before we ask this question, my question is actually, as we talk about alpha, we assume crypto is a legit investment. But is it really an investment? Is it really an asset class, right? Is there really alpha existing in crypto? So because I'll be the moderator, so I'll make sure all of those questions get answered. Now let's welcome our dear panelists to come onto the stage. So first, we have Mr. Bill Qian, president at Cypher Capital. And then we have Mr. Shiva Patel, co-founder and head of business strategy and sustainability at Carbo-X. And then we have Ms. Carmen Tan, chief communications officer at CoinW. And then, last but not least, Igor Sidelska, co-founder of Magnet Capital. Welcome. Cool, let's take a seat. All right. First of all, welcome. I hope it has been a productive day for every one of you. So maybe we can start with a brief introduction, like to give the audience some context what you're doing. Maybe we can start with you, Bill.
Sure. Okay. Yeah. Thank you. Thank you for having me. So good afternoon, everyone. My name is Bill, and currently I'm the chairman and the GP for Cypher Capital. So we are leading cross-stage multi-strategy investment firm in Dubai. And upon my main role under our whole group, we have the Phoenix miner, also the global top 1 Bitcoin miner with 7% of the hash rate. And apart from that, we're also running a regulated exchange, M2.com. Majority is owned by the Sovereign Wealth Fund from UAE, and basically it is a sovereign exchange based in MENA region. Before Cypher, I was with Binance, and I managed the Binance Global Merger and Acquisition and Binance Labs, etc. Yeah, thank you.
Great, thank you. Carmen?
Hi, everyone. Good afternoon. This is Carmen. I'm Chief Communications Officer from CoinW. I'm pretty late joiners for cryptos and Web3 industries. I only came into these industries in 2021. Previously, I was in Forex industry, derivative tradings. It's pretty much similar to the backgrounds of the extensive financials tradings, I would say elements and sectors. But nevertheless, these sectors has been very new and arising. It's required a lot of previous experience from myself as well. Like I do have compliance licenses and derivative generic advisors license from ASIC, RG146. So I hope to bring my experience and what I've known in the past into these markets and see what can we work for a better compliance and regulated arising sectors to this crypto world. All right, thank you.
Thank you, Carmen. Shiva?
Hello everyone. My name is Shiva Patel. I'm the head of sustainability and business strategy in a super sustainability token called Carbo-X. Carbo-X is a super sustainability token, as in it's a token backed by a carbon credit. And this is here where we bring down the collaboration of Web3 plus sustainability. My past experience has been into sustainability. I've been into verification, validation, and generation of credits. And from there, we got into the inefficiencies of carbon market, and we tried it to curb by creating this product called Carbo-X. Thank you.
Thank you, Shiva. Igor?
Hi guys, Igor Sidelska. I run an institutional asset manager in Sydney, Australia. We have 4 funds that we run, 2 active and 2 passive. I think I might be the oldest member here on the panel. I've been in crypto for nearly 10 years. I was actually very similar to Bill. I started mining Bitcoin and Litecoin in 2013, and we've been around as an institutional asset manager for the last 6 years, having been given an Australian financial services license in 2017.
Cool. So maybe, because alpha, I think for Bill and Igor is a term that is closer to your world, right, as like investors, as managers. So I'd like to hear about like your opinion, like how you evaluate crypto or Web3 investments as an asset class. Like when you talk to your LPs, your investors, like what's their appetite now? Like how do you even like pitch to them that like to still have faith in Web3 investment, right? And is there still alpha? Is there alpha in crypto in general? Like, yeah.
Sure. Yeah, so I think like, regarding as a asset class, we don't come across the innovation of the asset class every year or every decade. I mean, like, for equity as a asset class, I think it is established and innovated back to 1600 when the East Indian Company, they, went to the Asia and began to issue the shares. So by then, equity as a asset class was innovated. And after that, we come across, also bond and option, etc. So if we take one step back, pull all the way back, I think then the crypto is also a brand new asset class. So that's one thing. Yeah, the second thing would be like, how to understand crypto as a brand new asset class. I think like, for equity, usually you talk about like, if you own equity, you own some piece shares of ownership of some certain business. And if you own a piece of bond, like, some people own you the money. But what is a crypto? Usually, I tend to explain to my LP and investors would be like, crypto is the first, sort of a chance that all the private sectors, they are allowed to issue the money or the token. So when some people hold the token, basically, in the meantime, they are the investors, they are the builder, and also they are the user. Yeah, this is the first case. Yeah, and on top of that, like, crypto as a new asset class began to reform a lot of industry. I think by default, it reformed the gold. That's why, like, usually we call the BTC the digital gold, and also it getting into the exchange business, DeFi, etc. So we will love to, sort of phrase this as the fintech 2.0. Yeah, and on top of that, can crypto to reform, let's say, entertainment or social fi? We don't know yet. Yeah, but we just feel like, every asset class in the very early stage, usually there's alpha. Just like, all the venture capital, they boom since like, 1970, 1980. And, in the early stage, most of the venture capital, they can outperform the other asset class. Yeah, so we strongly believe that, the crypto is also in the early stage as a brand new asset class, and we foresee there will be a lot of, alpha, along with the innovation booms. Yeah.
Great answer.
Yeah, I actually agree with Bill a lot here. This is the next logical evolution to the internet. To us, it makes a lot of sense. You start with Web 1, where it was basically an online billboard that you were allowed to position your information towards. In Web 2, it allowed you to be a content creator. You could upload your video, you could upload your game and have users interact with not only yourself, but the things that you create. In Web 3, you own a piece of that internet, and that has never existed before. Short of owning undersea cables, you really can't own any core infrastructure to the internet, but in a decentralized manner, you absolutely can. You can own a piece of Ethereum which runs the decentralized internet, and that has never existed before. That gives people freedom, that gives people power, it allows businesses to be created where they weren't able to be created, it allows efficiency improvements. So when we talk about this asset class to our investors, we talk to them about what the logical next steps are. And every 6 months, roughly every 6 months in this market, you have brand new new innovations that come out, whether it's smart contracts, whether it's L2s, ICOs, NFTs, GameFi tokens. These are all new business line items that are created on top of what we call the decentralized internet.
Cool. Besides fundamentals, because your area is more like on the secondary trading, right? So also like you've been in this industry for quite long and you've experienced several like cycles of the market. Can you maybe talk about the risk and return profile of like crypto? Like how's your investments performing? Like is it really alpha, like the real alpha in it? Yeah.
Yeah, I mean, look, over the last year, crypto has been destroyed, and that's because we had one cascading failing event after the other, culminating with FTX. It's really difficult place to get alpha, and when you talk about alpha, you have to understand what the beta is. So, is the beta Bitcoin? Is the beta the S&P 500? Like, what is the baseline? Is the baseline inflation? Because if the baseline is inflation, then there's tons of alpha in the market. If the baseline is Bitcoin, then you're really going to struggle, because what happens when the market comes down is every other asset comes down further than Bitcoin does, because Bitcoin is a flight to safety. It's the largest, most well-known, and even Bitcoin comes down 60, 70%. So it becomes incredibly difficult to find new ways to get alpha. The way that we're doing it, we are 100% liquid, so we're a token-only fund, 100% liquid. We focus on real-world assets. We focus on real-world businesses that have a intrinsic value, and what that means is the token ties back to the value of the business. There are real users paying real fees, and those fees are distributed to token holders. That becomes a really intrinsic element, because it's not an inflationary APY. It's not just creating more tokens for the sake of tokens. You're actually seeing people pay money to use protocols. That money is being collected and then distributed to participants. And the participant is the person who holds the token. So you've got assets like GNS, you've got assets like GMX, which run exchanges that do this, which are really interesting to us. And Radiant, for example, is exactly the same as Aave. It's built on Arbitrum, but it has that mechanism built in, where Aave right now capture all of that value to the treasury. Radiant push that value out to the people that contribute to the network. So that's another way to make alpha. And you're seeing somewhere between 3 and 9% in a bear market, and upwards of 15% in a bull market, which is fantastic, especially if you want to just hold that token natively, because you get the upside benefit of being in that token, but also you get a dividend-like structure coming back to you, and that's how to generate it.
Great, very insightful. Since you mentioned like you're investing tokens that are backed by real-world asset, maybe let's come to Shiva. Maybe like you can spend some time to explain to our audience your business model, because you're building a token backed by carbon credits, right? Yeah, do you want to like introduce what you're building?
Yeah. So Carbo-X is a token which is backed by a carbon credit. So I'll just give you a brief that why we came up with this idea. What were the earlier inefficiencies that were there in the carbon market? Carbon credit tokenization, as if is the integration of APIs are not allowed. The major of the vintage registries which are there prevailing in the market, they are still in the public consultation period, and they don't allow tokenization. Hence, we came up with an idea by not to integrating the APIs of the carbon credit to a token, but to back the token by a carbon credit. So, for example, you can have a Carbo-X token in your wallet. You can play around with the speculation, and the day when you want to break that token into retirement of the carbon credit, you can come back to our platform and ask us for a retirement, and on your behalf we do the carbon credit retirement, and we give you a carbon neutrality certificate. In earlier carbon credit market, there were many inefficiencies. There was no accessibility to common individuals, because in order to create a account on major of the registries from where you purchase carbon credit, it's very tedious, it's very expensive. In order to buy, for example, if Julia, if you want to buy 10 carbon credits, you have to go and make an account on a registry by giving thousands of dollars, and then you need to go and find a project there which has 10 carbon credits only. So, which is not allowed. Nobody is going to give you 10 carbon credits from the inventory of 1,000. So this was the prevailing problem there. Second is fractionalization. Carbon credits are not fractionalized. The definition of a carbon credit is, when a carbon emission reduction is done of 1000 kg, you are entitled to have 1 carbon credit. So a carbon credit is nothing, it's a certificate, it's a certified emission reduction certificate, which tells you that you have done a carbon emission reduction of 1000 kg of carbon or any other greenhouse gas for that matter. So for example, Julia, for just to take an example, if you as an individual want to become a carbon neutral or you want to go net zero, we'll calculate the amount of carbon emission done by you annually. And let's say if it's 250 kg that you have emitted through your entire year by, by all your travels that you have used, by your charging phone, any energy consumption that you have done. Now to retire that 250 kg of carbon emission, you need to have a credit which is of 250 kg. But the prevailing segment was, a carbon credit was equivalent to 1000 kg. Why will you use it? You only require 250 kg to retire. Hence, by putting it on blockchain, we came into fractionalization of credits where a person can use only the amount of reduction he wants to. Second is traceability. So, in order to generate a carbon credit, there's a lot of process of verification, validation. You need to have a project where you do something for the environment. They are called renewable energy projects. You act as a project proponent there. So, there are a lot of steps which are not related. The person who's buying the credit should know that from which project this credit was generated. So, traceability was one of the major issues which was being solved through blockchain and AI, thanks to it. And the other thing is tradability. In order to trade a carbon credit, a person again has to go and make an account on the registry, again, which is very expensive. So by putting it on blockchain and bring it to the exchanges, it gives you an authority and you are eligible enough to buy a credit, sell it, and so on. So, this is how we have collaborated the feature of sustainability with Web3 and AI.
Great. Love the model. I think you guys are definitely adding value to the traditional carbon market landscape. So let's come to Carmen, because you are from the exchange, right? You guys have saying like numbers that we don't see. I bet you have a lot of insights that we don't know, right? So the market right now is really tough. Liquidity is all-time low since like 2021. And also the regulators, they are being like harsher and harsher, like in certain markets at least. So how do you think the landscape of centralized exchanges and decentralized exchanges has been shifting? And how is CoinW's position in this? Yeah.
Right. Currently, actually, when they say, there's a downtime in the market, there's two ways that centralized exchange or institutionals can work on, which is the regulations part and the educations part, what I say. During the peak time, when everyone knows how to trade, which is the market started blasting, they have the initiative. Users have the initiative, start to understand how to trade and how can they engage in these industries. When there is a downtime, as Julia mentioned, which is now or since 2021, you have to change the role. Now, our centralized exchange, we are working very hard to obtain the regulations, licenses. Let's say like CoinW, currently we are very proud to announce that we have obtained VARA license that allow us to legally operate out of Dubai, and as well as the existing Europe license that we have that can able ourselves to serve the European market as well as South American market. So these are the elements that we can provide to our users, come to our platform certainty and understand they can work on it safely in exchange of their knowledge. And the other side of what are we currently building on its educations. So now when it comes to a very slow pace of the market growth, what we can do is provide more information to our users. Up to today, we have probably acquired 10 million users worldwide, which in our app itself, we have already enabled and implemented and community channels, which allowed the user worldwide to be able to just one click in their phone, anytime, anywhere, engage themselves, regardless you are an advanced users or you are an junior users. You can exchange your ideas about how actually it works on tradings or a place that can gather you for your common ground into this space to have each other back and the collections of wisdom itself to exchange. So these two can actually work from our side to as a centralized exchange to contribute into the community. And we wait again when will be the next arising moment. That until then, our user will be all trained and fully be understand how cryptocurrencies or how Web3 should be entered. And the other side, as you say, as a decentralized exchange, there is a lot, to be honest, of bottleneck they have been faced. The user of decentralized exchange, first of all, they need to acquire certain knowledge of how to function their own private keys and their wallets, storage, and more advanced, I would say, technique or safeguard to be used by themselves. They have to be well independent and equipped with the ability of understand what is the technologies and underlying the language, right, underneath it. So we see how to be efficiency for decentralized exchange engage into the users and the landscape they pay for themselves. It's we see Ethereum has proposed their EIP, 4844, which is ideally will be landing on late October. So we will see how it improves and bring out the ultimate outcome to eventually lower the price and fasten the storage and processing. Then it will be how benefit to the community and works more efficiently to benefit the ecosystem, I would say. Yeah.
Great, thank you, thank you. Now let's come back to Bill and Igor about on the investment side, right? I think the audience would like to learn more about your investment strategies in general. Like, what's your perception of timing? I love like doing consensus on like when do you think the bull market will come back? Timing, also your like current investment strategies, token investment versus equity investment. Like for Igor, like why you never make any like primary, like why you never invest in projects, right? Why do you want to just focus on secondary market? And also in terms of narratives for Bill, what kind of narratives or like new technologies in Web3 you are betting on currently? Yeah.
This is a really hard question, so I'm going to let Bill go first.
Okay.
Yeah.
Thank you. Yeah, so for Cypher Capital, we are a token-only fund. Yeah, but we divide the token into three different categories. Okay, so first question would be like why token instead of equity? Because in crypto, we also come across quite a few opportunity which you can be the equity investor, because we see in the foreseeable future, most of the equity deal, they're sort of like fintech crypto deal, usually under very heavy regulation, and also because with the consideration of the interest rate would be significantly higher than the past 2 decades, we feel like equity as a risk assets, as a discount cash flow model, we are not that bullish on the equity deal. So that's the reason that we just want to focus on the token. But for token, usually we do 3 categories. The first one would be the self-miner. We still feel like the Bitcoin would be the benchmark or index of the industry. Yeah, that's why we spend significant portion into the Bitcoin miner still today. And also because by leveraging our sibling company Phoenix, it's a global top 1 Bitcoin miner by hosting 7% of the hash rate, so we can leverage the facility to do the self mining and to generate the cash flow. And on top of that, we do the venture and the liquid strategy. And for the venture, we spend quite a few the weights into the infrastructure. Even now there are a lot of narrative about GameFi and application layer, etc. We still feel like the blockchain as a worldwide computer, it's in the early stage, as early as 1995 internet. Yeah, when we talk about Web 1. Yeah, that's why we invest in the Sui blockchain as the only node provider from the MENA region. And also we invest in the Tom Foundation, which is a layer 1 designed by the Telegram. Yeah, for those kind of infrastructure is our appetite. And for the potential narrative, to be honest, I don't see there are some kind of many brand new narrative. I think now the key challenge for the industry would be the founders need to deliver the narrative previously. Yeah, like the account abstraction or like the scaling, etc. Yeah, so, but to be honest, I think the scaling and the AA, which is account abstraction, those are, the good narrative which will bring the industry to the next generation. Because so far, if we compare the users, the user base of the Web2, we have 5 billion daily active user. Within the 5 billion daily active user of the Web2, we have multi-trillion-dollar market cap, Apple, Google, Facebook, etc. All of them, they are Web2. And they have the legit use case. As compared to the Web3, we only have 500 million crypto holders. And when we talk about the daily active user, I think it's still less than 10 million. Yeah, and as long as we cannot address the scaling, the use case, and also the account abstraction, I feel those bottleneck will stop the market by getting to the next generation of the bull market. Yeah. And to come to the last question about the timing, I think this time is a little bit different. Even we're the global top Bitcoin miner, all the miners believe the Bitcoin is halving story. And we believe, most of the miners are waiting for the April 2024, Bitcoin half again. And then after 12 months of the Bitcoin halving, usually there's another bull market. But I just want to say, all the experience we got, most of the industry players they got from the past 2 cycles are within a bigger cycle, which is low interest rate cycle. Yeah, because since 2000 to 2020, the whole global, the interest rate is very low. The money is cheap, and BTC established back to 2009. Yeah, but will or will not the next bull market come? I think halving will still generate the demand, and because it squeezes supply. So in general, we believe the bull market will come. But regarding the degree, I think we're sort of prudent. But I think in the end of the day, everything will just come back to the fundamental. I think the user base and the application will be the key driver of the next generation bull market.
Yeah, that's very well said, and we tend to agree with that quite a lot. Everyone's sitting around waiting for a bull market to come, and it's absolutely the wrong thing to do because we think this time is going to be wildly different to the last time. There are fundamental catalysts that might instill the next market to drive up, but we have to recognize the position that we're in, and maybe 6 to 12 months away, we might still be sitting at a $30,000 Bitcoin price, and I don't think the market is quite ready for that one. So it's easy to say this time is different, and I think it will play out that way. But going back to the original question, so we're a liquid token fund. The reason that we're a liquid token fund is we believe it's considerably easier. With equity, you've got thousands of really great VCs, already established traditional managers that manage equity. Thousands of them. But tokens provide a clarity which you typically don't get. You never need to speak to a management team to understand the token. You never need to wait for a CFO to compile a financial report for you. Everything is available on chain. Everything is transparent. So for us, it's a lot easier to dig into that space because we've got scale. We can do 4 or 5 projects all at the same time without ever having to talk to a team. And that's really what attracted us to tokens. It will be the way that businesses are built in the future. Internet businesses are built in the future. Equity definitely has a place, but it is a completely different market. If you're building an internet company today that has any interaction with any blockchain or any Web3, it makes a lot of sense that you build it with a token format. And that typically means that you either have to pick either equity or token because you operate businesses in 2 very different ways if you pick both. For us, in terms of how we pick assets, we've got 4 funds. We've got 2 passive funds, which are Bitcoin and Ethereum only, and we've got 2 active funds. Our flagship fund is Magnet Trust, And in there, we have 4 strategies, 4 investment pillars. One is store of value, which is typically Bitcoin. The second is infrastructure, and that's typically Ethereum. We also have interoperability in there. So we feel that for interoperability, at some point in time, you will need a requirement to have a Bitcoin blockchain talk to an Ethereum blockchain. And you can only do that with something that is also decentralized. Otherwise, you do it through an exchange. So for us, we think that this is a growing narrative. There really aren't a lot of businesses that operate in interoperability. A lot have tried, but it's incredibly difficult. So Layer 0 does it for Ethereum-based assets and maybe some other chains. But Thorchain does native Bitcoin to Ethereum. So, for example, Thorchain has been around for a very long time. They've been building. They have been growing in total value locked. So that we can see on chain. That we can get out of the management team. You don't ever need to engage with 9 Realms who run the nodes. You can see it. It's real. And you can see people transacting. You can see how much they're paying for fees. So it's really interesting. So interoperability is a good one. We do decentralized finance, which is obvious for us. We really think about where the market is going, what's going to be adopted, where are the users going, where are the users paying money, and where are they spending money. And it's decentralized finance because it's the easiest use case to understand. Everyone knows what borrowing and lending is. Everyone understands what a stable coin is. People really resonate with this, and it's probably the biggest use case in crypto right now. And then we have a very small meta arm, which is anything from NFTs through to gaming. It's probably the smallest because there's a lot of noise in that area of the market at the moment. And for us, we'd rather be the picks and shovels. So rather than picking the games themselves, you look at infrastructure that services games. It's a much easier bet because I used to be a gamer. It's incredibly hard to pick games. It's incredibly hard to pick which NFT is going to turn into the next Bored Ape. It's really difficult to do that. Like, community building is massive in this space. So I would rather bet on a marketplace or an infrastructure play that helps games become more accessible, or account abstraction, which gives in-game wallets the opportunity to grow value into value from your game into real world. So those kind of things are really interesting to us. The games themselves, I think it's a really difficult market. I think it's really tough.
Nice, nice. Let's come back to the builder side, Shiva. After hearing what Bill and Igor said, how do you feel as a builder in a bear market, right? What's your strategy? Like, how do you feel right now? How are you building up alpha in your system in this market?
So building an alpha in my system is like, it's day ahead because, when we talk about sustainability, our product Carbo-X as a team revolves around sustainability. And when I talk about sustainability, I think we have already missed the train. Now, climate change is irreversible. And we really need to get on some very fast jets to reach the destination, or else it's going to be very tough. One serious question, even I would like to ask Bill and Igor as an investment group. What exactly, Igor, do you think that how the tokenization can be collaborated with sustainability when we have lots of issues regarding the registries itself? So, the registries right now, they are not allowing the tokenization. They have withdrawn the permission. 2 of the major registries of the market, Vera and Gold Standard, they have withdrawn the tokenization. They're still into public consultation. And with product like ours, who really want to, who have really worked hard from past 6 to 7 years in making sustainable projects, accumulating carbon credits, and now people like us, we want to get into tokenization because that provides us a wider market for people to reach and contribute to sustainability. So where do you see us when, how do you, in your eyes, you see sustainability coming along with tokenization?
Yeah, it's a great question. I mean, one is you need to become the trusted the trusted third party. So in order to take any real world asset, whether it's a carbon credit or you're trying to fractionalize any traditional asset, you need to build trust in yourself as a business, because you're effectively the controller and the owner of the token. So you, regardless of what happens, if you think that you've got high conviction in this area and you think that you're doing the right things, you have to keep going, because regulation will follow. So for guys like yourselves, you have to lead the way and show them that you are doing everything in the right way, from creating the right contracts, from itemizing and accounting for those carbon credits, for communicating that message. And when you become the trusted advisor, suddenly your carbon credits, they create liquidity. And that's what you want to do. So you basically want to distribute that token. You want to create liquidity for that token. You want that token to be recognized as it comes from a tier 1 financial provider, which is like yourselves. So the way that you do that is you have to build credibility by doing it right in the real world, and that will be transferred into the digital world. That will be transferred on chain. So they'll see, when it's a Carbo-X, yeah, I know them, I know the business is really good, therefore that credit is worth something. If you're a new entrant trying to come into this market, it will be very hard to displace you. So you need first mover advantage, but you need to do it in a very sustainable, maintainable way. And unfortunately, in our world, that means high regulation, high compliance, high audit, high transparency, and it's you guys at the end of the day.
Understood. Thank you. Your suggestions are, valuable.
Nice.
So Julia, going ahead for your question, to see an alpha and where we are standing is, the day when, at least from the place from where I'm working, I will be able to meet the net zero targets that we have set for ourselves. And we are trying best to work on with AI and Web3 to make the marriage of sustainability and Web3 successful.
Great. Bill, what's your view on RWA DeFi, like tokenization of real world assets? It's a big theme in Hong Kong as well.
Yeah. To be honest, I think RWA is not a brand new concept. I think as early as blockchain began to take the journey, when Bitcoin started back to 2009, I think in past 1 decade, there are many entrepreneurs who want to get into the RWA. Like, tokenize a stock, it is a RWA. Like, tokenize a real estate, like, become a next generation REITs, that's the RWA. But like, in past 1 decade, we do see, most of the RWA fail. I think partially because the reason is because, like, they want to deregulate a industry which is properly regulated before. Like, an entrepreneur who want to tokenize a stock. But stock by default is regulated properly by SEC, by stock exchange, etc. Right? And by tokenize it, basically you want to deregulate it. And in that case, basically you are on the opposite of the regulator. Yeah, I think that's a key thing why most of the RWA didn't happen in past 1 decade. Having said that, we do feel like there is some kind of a brand new market which welcomes the RWA, because that market is a like innovation market. That market is not properly regulated. There are not many incumbent players over there, like the carbon neutral market, etc. Yeah, and even like we see some entrepreneurs who want to tokenize the royalty program, and the royalty is a unregulated consumer industry customer acquisition toolkit, right? Yeah, so we think that in the end of the day, RWA definitely have a very clear value proposition. Because on blockchain, basically you provide accessibility to all the 5 billion users. If you can link this token, link this a blockchain product with the real world assets, yeah. So it democratizes the product by first place, yeah. But on the top of that, I think RWA is also a challenging industry, because you are tokenizing real world assets, and all entrepreneurs need to be very mindful about how to deal with the incumbent player, how to deal with regulator, be constructive. And based on that, I think in the long term, we are really bullish on the new asset class RWA, like carbon neutral, etc.
Yeah. Great. So Carmen, I'd like to talk about something that is perky, the meme coins. I have friends who have day job, like very serious day job, but in the night they like trade meme coins, right? So from the exchange perspective, you guys see a lot of numbers, you have a lot of insights. So do you believe there's alpha in meme coins? Like what drives the successful meme coins successful? Like what makes PP?
Right. To be honest, if you ask me what is the horizon of a meme coin, it's basically just for fun, right? Have a good laugh, isn't it? This is how it origins. And later on, I think this is some kind of a very Gen Z activity. And how it became a trend, and everyone wanted to build their own projects into something related to Web3s. And then we see projects come after one after another. And back to your questions, that would like to take the current PP coin, right? The PIP, why it became so famous, and how do I see alpha in this PIP coin compared to the others cryptocurrency. If we really wanted to throw an economic lessons in these panel discussions, then we have to back to the beta that Eco has been discussed earlier. But we're not going to go deep into this CAPM, which is capital's asset pricing models. This is a long story, and it shouldn't be only discussed in this panel. Just give a very simple comparisons among these two coins, and how do we already seen alpha in from this PP coin. Just make a very simple comparison. When you have two buckets of money, 1,000 of each, when you invested into Bitcoin and invested into PP coin, each you own one fraction of Bitcoin, another you already own a billions of PP coin. Let's say the overall 24-hour growth of each coin are 0.05%, starting from today up to December 31st, let's say. So finally, you want to harvest your investment at that time, at that point. You see the rolling increment, because all the professors tell you in their classroom, it's very optimistic case, right? It's what if, always a hypocrites. There's no any example that fall over or fall out of their predictions. So in this best case, we wait until the end of the years, and now you already own selling of your Bitcoin, then you minus your 1,000 initial capital. The eventually result that you obtain from your Bitcoin, your gain is 33% or around that figures. Then end of this year, if you sell off all your PP coin, you own 1 billion of it, and you sell at that price at that point, and minus your 1,000 of investment, guess how much percent is the return? It's 130 million % of return in this meme coin. So back to the CAPM that we have already discussed. This is a simple one. You use your alpha, and you minus what is the number of it. You already see the the value gap. This is what you earn. So you don't actually need to place this mathematics into CAPM. You already have the very sharp comparison. PP coin has allowed you to earn way more. You already found the alpha in PP coin, right?
Do you want to comment anything, Egor? I saw you.
So, I think people might overthink this. It's just fun. As you said it yourself, it's just fun. In the beginning, it's just it's just a community that anybody can launch anything, and it ends up being a gamble. If there's no fundamental value, if there's no intrinsic value, then you're just hoping that somebody else buys it off you for more. That's really the.
Is the market cap too big for just something fun? Like, to put it in another way, do you think it's toxic? Like, even like that meme coins exist in the Web2 world?
It's kind of the same as gambling. Like, gambling is not a net positive for the environment. It's not a net positive for people. but it's fun and people do it and it exists and it's a huge industry. This is never going to go away because you've given people flexibility, you've given them the ability to put their character into a token or their personality into an NFT, and everybody else either loves it or they hate it or it becomes inconsequential. So that will never stop. Whether it's good or not is very subjective. We don't invest in it because fundamentally it doesn't have any value, so it's really hard to make a business case to invest in Pepe or Doge or Shiba or any of them, because it's just really hard. But will they always exist? Absolutely, absolutely.
Got it. I think we're running short on time. It's very interesting that we talk about alpha and we wrap up with talking about mimic coins. But then we do have a couple of minutes that maybe each of us can take turn to just wrap up with one or two sentences. That anything you want to share with the audience today.
So one thing I just want to share with all the investors and entrepreneurs would be forget the timing and just focus on survive and build in next 24 months.
Right. Speaking from a regulated exchange point of view, always invest in a regulated exchange and do your own research before enter to any you found what is risky. All right.
I'll just like to give a very insight into what I feel that people should really start investing in carbon credits. It's going to be the next crypto, I guess.
Good. I'm going to try and not talk my shop. This is an asset class which is not going anywhere. We might be in a bear market, but over the next 3, 5, and 10 years, this market, irrelevant of the price, will be much, much bigger than it is today. This is an insane opportunity for anyone that wants to get into the space. Whether you're a builder, whether you're a sales guy, whether you're someone just looking for an alternative, to us, this is the next evolution of the internet, and it's only going in one direction, and that's up.
Nice. Great. Thank you so much for your time. I think we really learned a lot from the discussion just now. And yeah, hope you also enjoyed the conversation.
Thank you. Thank you, Julia.